Welcome to the deep dive. Today, we're looking at some really fascinating sources outlining a potential strategy from China. It seems they might be setting the stage for, well, maybe the biggest shift in financial history. It could redefine the U.S. dollar's future.
It's definitely provocative stuff. And what's really interesting is how the sources draw this parallel, this echo of how America itself became a financial superpower all those years ago.
Right. It feels like history repeating, but with different players and a different commodity.
Exactly. This isn't just about which currency people prefer. It's potentially about changing the fundamental mechanics of global trade, the whole engine.
Okay, so let's unpack that. To really get what China might be planning, we first need to understand the system that's been in place for, 50 years now? The petrodollar?
Yeah, the petrodollar. It basically started back in the 70s. There was this deal, a pretty foundational one, between the U.S. and Saudi Arabia.
The U.S. guaranteed Saudi security.
And in return, the Saudis agreed they'd only sell their oil in U.S. dollars, only dollars.
Seems simple enough on the surface.
Deceptively simple. That one agreement created the whole petrodollar system. It meant global demand for the dollar stayed incredibly high because, well, everybody needed oil.
And for a long, long time, oil meant you absolutely had to have U.S. dollars.
Precisely. So this gave the U.S. this unique structural power in global finance. Since the 70s, really. It wasn't just about trade. It propped up the dollar as the main reserve currency. Huge advantage for the U.S. economy.
But things are changing, aren't they? The sources we looked at really hammer this point home. There's this massive global shift happening away from oil.
Towards renewables, yeah.
Exactly. And in that shift, there's one country that's really emerged as the leader. I mean, way out front. China.
Right. And that's where China's potential new blueprint comes in, according to these sources. They're looking to leverage that dominance they have in renewables.
So instead of oil.
Instead of oil, electricity. The idea is to make electricity the new foundation for global trade, and critically to back their currency, the RMB, with that electricity.
Wow. Okay, that would be revolutionary, wouldn't it?
Yeah.
Flipping the whole script.
Potentially, yes, a financial revolution. It could, theoretically, give China the kind of global influence America's had because of the petrodollar.
So how would that actually work? I mean, in practice, an electricity-backed RMB, what does that look like on the ground?
Well, the sources suggest it mirrors the petrodollar playbook, just swapping oil for electrons, basically. China would need to massively expand its energy projects across borders.
Building grids, transmission lines.
Exactly. High voltage lines, regional power grids connecting countries, launching these huge renewable mega projects all over the place. But here's the crucial part.
Let me guess. Payment in RMB.
You got it. Requiring that all the electricity they export gets paid for in renminbi, that's the linchpin.
And the effect of that? Well, it seems obvious. Countries needing that power suddenly need RMB.
They absolutely would. They'd have to start holding RMB reserves. So step by step, it internationalizes the currency.
It makes sense. You lock in long-term contracts, maybe offer stable pricing for electricity.
Right, something every economy needs. It could create this really predictable, stable market for energy trading. You're essentially anchoring the RMB to, well, the most vital energy source for the future. It's like a new kind of gold standard, but based on watts.
And for the countries buying the power, it potentially reduces their exposure to dollar fluctuations, too.
That's another angle, definitely. A move towards perhaps a little more financial independence for them while tying them closer to China's energy ecosystem.
Okay, but the sources mentioned this plan kind of depends on two big things happening, right?
Yes, two major conditions. First, China actually has to be able to supply truly massive amounts of energy, enough to meet significant global demand.
Which, looking at their current build-out rate, seems plausible.
Their trajectory is certainly heading that way, yeah. The second condition is maybe more pointed. It requires the United States to essentially fumble its lead, to squander its decades of energy dominance.
And the sources argue that's already happening.
That's the sobering part. The argument is that both these shifts are not just possible, they're happening fast. And maybe, in some ways, the lead has already been squandered.
How so? Complacency.
That seems to be the core argument. That the U.S. got comfortable, stuck in old ways of thinking, maybe relying a bit too much on, American exceptionalism.
Instead of adapting to the new energy reality.
Exactly. And that's left the country, potentially, quite unprepared for how energy is reshaping global power dynamics right now.
Let's look at specifics. The sources give some pretty stark examples of U.S. struggles, like electricity demand just soaring. especially with the AI race heating up.
Oh, definitely. Those huge AI data centers are incredibly power hungry. The sources mention the Stargate project, that huge OpenAI initiative with reportedly backing from the Trump
The
administration.
$500 billion one.
That's the one. Apparently, it's already hitting snags because the U.S. grid just can't reliably supply the sheer amount of power needed. It's a fundamental bottleneck.
And it's not just AI. The sources point out that U.S. electricity generation overall hasn't really grown much since 2005.
Which is wild when you think about it. Think how much technology has changed since 2005. Our whole lives run on more electricity.
While China's output has been leaping forward year after year.
Right. There's that Fortune article that went viral talking about Chinese AI experts visiting the U.S. and just being shocked at how fragile the U.S. grid seemed.
Leading them to conclude that the U.S. might struggle in the long-term AI race because of it.
Yeah, because without the power, the best algorithms don't mean much, do they?
And the sources dig into why the U.S. grid is lagging. It mentions the investment model.
Private investment drives most big infrastructure projects in the U.S., but investors, they typically want returns pretty quickly, right? Like 3 to 5 years.
Which just doesn't work for giant power projects that take maybe a decade or more to build and start paying back.
Exactly. So those crucial long-term strategic projects often struggle to get funded, whereas China's state-directed approach means they can pour money into strategic sectors before the demand fully materializes.
Even if it doesn't make immediate profit, they're building capacity for the future.
Right. It's a different philosophy, maybe one that's better suited for these massive long-term infrastructure needs. Without more public financing or de-risking in the U.S., it's tough.
And it's not just AI, is it? The grid issue also hits electric vehicles.
Huge implications there, too. EV sales are exploding globally. What was it, 17 million last year? Up 25%.
Yeah, and projections show them being maybe half of all car sales by 2035.
But America's infrastructure is still mostly built for gasoline cars. Charging networks are patchy, and the grid itself isn't ready for millions and millions of EVs plugging in.
So the sources trace this back to complacency, relying too long on cheap oil.
That's the argument. That U.S. energy dominance from the 70s based on oil isn't the same strategic advantage in 2025. Washington's still focused on drill baby drill, maybe overinvesting in natural gas.
Which the sources call outdated and costly.
While China apparently saw this shift to renewables coming years ago and went all in. A real strategic divergence.
Okay, let's pivot to what China is doing. The sources highlight some incredible projects, like the thorium reactor that just came online this year.
Yeah, that's a potential game changer for nuclear. Thorium's more abundant than uranium, it's less radioactive long-term, potentially safer reactors, less waste.
So cleaner, safer nuclear power.
That's the promise. It could really shift the landscape for sustainable energy if it scales up.
And then there's that dam, the Yarlong Sangpo project in Tibet.
Oh, that one's just monumental. When it's finished, it'll be the biggest dam and the biggest single power plant anywhere in the world, ever.
The numbers are mind-boggling, 300 billion kilowatt hours a year.
Roughly, yeah. To put that in perspective, you mentioned the UK earlier. The entire UK used about 259 billion kilowatt hours in 2023.
So this one dam could power the whole UK.
Pretty much. It's an incredible engineering feat and obviously a massive strategic energy asset for China.
And these aren't just for China's own use, right? The strategy is explicitly about exporting power and infrastructure.
Definitely. They're turning energy infrastructure into a tool. It helps other countries develop, sure, but it's also the mechanism to get the RMB used more internationally. It's a dual strategy.
The sources gave examples. Laos signing that big clean energy deal with a Chinese firm.
Right. And the key change there was direct RMB settlement. Before, Laos would have had to convert their money to dollars, then dollars to RMB, losing a bit at each step.
The dollar taking a cut, basically.
Exactly. Now, their central bank can just transfer RMB directly to China, keeps more value locally, strengthens ties, and boosts the RMB's role.
And Brazil, that long transmission line built by State Grid China.
Similar story. Exporting the infrastructure, yes, but also exporting a financial pathway that bypasses the dollar system. It's happening more and more, especially in the global south, a slow chipping away at dollar dominance in trade settlements.
Then Ghana, that hydropower station, providing a third of their electricity.
Yeah, the Three Gorges of West Africa.
Right.
And it wasn't just the dam. They built the whole system, turbines, towers, and crucially, they trained hundreds of local technicians.
Setting up a training center, too.
Right. Building long-term capacity, not just dropping off equipment. It's a much more integrated approach.
And the sources really emphasize China's ability to build these things in tough places, mountains, jungles.
Places where U.S. firms might hesitate or quote much higher prices. Decades of global infrastructure building have given Chinese teams this incredible capability that's hard to match now. They can dominate energy infrastructure construction almost anywhere.
Which really brings us back to the core issue. For you listening, think about this. The dollar's dominance has rested on two things for ages, right?
Oil and U.S. Treasury bonds. The need for oil kept demand for dollars high, and treasuries were seen as the safest place to park money.
But China's strategy, as these sources laid out, seems aimed at undermining both. They're making renewable energy potentially cheaper than oil.
And trying to turn that electricity into a new, stable financial anchor denominated in RMB.
So what's the takeaway here? What does this mean for all of us?
Well, if this transition keeps accelerating, those structural advantages the U.S. had, like cheap energy influencing global finance, the dollar as the default, they could diminish pretty quickly.
Leading to, potentially, a major realignment. The dollar's influence perhaps waning, while an electricity-backed RMB could become central to 21st century trade.
It's a profound potential shift. And interestingly, the sources also touch briefly on how individuals might need to adapt, thinking about, new financial technologies.
Like decentralized finance, crypto assets.
Yeah, things operating outside the traditional banking system. They note even the Trump administration is looking at U.S. crypto policy, suggesting it's becoming a mainstream consideration in this changing financial world.
So, a final thought to leave you with. If the bedrock of global trade really is shifting from oil barrels to kilowatt hours, what else changes? What does that mean for geopolitics, for innovation, for economic power, beyond just who sells the energy?
And maybe, how do you position yourself financially in a world where the very definition of global economic power might be undergoing such a fundamental rewrite? Lots to think about there.